What's up, everybody? Dave Bartosiak here for another one of Dave's Daily Dives. Today we're going to look at the NASDAQ, the S&P, then we're going to check in on oil to see what happened over there, and then, I don't know, maybe a couple other things. In addition to that, as always, I've got 5 Zacks Rank #1 strong buy stocks that are breaking out to the upside. So let's get started. First, looking at the price action on Friday with the NASDAQ. So here I've got the NASDAQ futures. And, you know, you'll see our typical sort of rally. So here's the open of the U.S. market. A rally throughout the course of the day, stalling out at about 54.52 here on the futures at 12:35 Central Time. Then we chopped down through the VWAP, almost got to 1 standard deviation away from the VWAP. Interestingly enough, that's right about where we saw support in the morning also on that first dive down. That's what this first little green line is. Anyway, so you have a little bit of support there, break on through 1 standard deviation away from the VWAP, shy of the highs, and then a reversal, and the shares sold off into the close, and then trickled, you know, sort of lower. So overall, I think the market ended up in negative territory. So the NASDAQ gave up 261. You know, that's 4 bips basically on the NASDAQ. So not a whole lot of worries there. But that was the situation Friday. If we take a look at the ES or the S&Ps, very similar sort of story. But we've seen this before, where early in the morning we sell off. In this case, it didn't get anywhere near the Globex low. The Globex low is 57s. Rally here, get up throughout the course of the day. Here we put in the highs the same time here on the S&P, 66 3/4. Sold back off to that 1 standard deviation below the VWAP. Rallied up, ran out of gas near the highs, and then sold off into the close, with the S&P giving up 5.34 in the cash market, 23 bips. So here on the futures, we're at 23.57. On the cash market, it was 23.62.72 was the closing level on the S&P 500. So let's go out to the dailies on the S&P here, and you can see that really the last couple of days sort of stalling out, not really taking out the high. So perhaps we've got a short-term high that's been put in here, and we can expect some more downward pressure here on the S&P. Could we get a retest of the low of the 27th? It's certainly possible to see here, sort of that overnight low that got put in. And then, of course, you know, the rally that ensued throughout the course of the week. So I don't know, this is a Sunday night low, and then rallying, of course, like I said, these are the futures. So right now, I mean, it does look a little bit negative. You do have the commodity channel index coming from an oversold position up through the zero line just a little bit, but this is a pattern that I play a lot when I'm trading momentum stocks on the opposite end. So what I mean by that is I look for a commodity channel index that was overbought, comes down to touch the zero line, and then I buy it as it bounces. Here it could be the opposite scenario. This could be a bounce here, and if it goes lower, then we're talking about retesting that Sunday low, and then maybe even getting down into the 2250s after that. So not the most bullish of charts here, but again, we do have the 50-day moving average that is providing some support, so we definitely have to keep an eye on that. We could be in one of these situations like we had from September through November, where we're kind of fighting some resistance at that 50-day. So that is something definitely to keep an eye on, because if we get in one of those scenarios, we're going to be chopping around quite a bit. So you may or may not want to you know, participate in that. But back to this NASDAQ right now, and if you look at the dailies, you'll see that this just keeps ticking on higher. Has been very bullish throughout the course of the year. Just keeps on going, keeps on trucking, and the NASDAQ just does not seem to care, which is a little bit of a contrast when you compare that to the small caps. So these are obviously more domestically inclined. Small caps had a decent day, still didn't get over the March 17th, the St. Paddy's Day high. And of course, really, I mean, this is just part of a longer consolidation that we've seen since December, really, with the small caps just kind of bouncing within a 80, what was that, an 80-point range here. So Really, I think the way to play these small caps is a break above the all-time highs or a break down below this level for you to actually make some money, because they may run if they make that move. But right now, this consolidation, you really just want to buy the lows, sort of wait, right? So this isn't something I'd be jumping in here. I wouldn't be looking at anything in the Russell to get really heavy into, right? If you're already exposed to it, then great, but you got to kind of sit and wait, so to speak. As always, I like to look at what happened with the 10-year. So we've got a rally here in the 10-year, which means that we saw interest rates tick down a little bit, okay? So surprising, you get the Fed raise, and for a little bit there, we got interest rates kind of starting to normalize and go higher, and then all of a sudden now interest rates have been ticking lower here. Not what you would expect out of a rate rise environment. All right, so now why don't we take a look at a couple of these stock ideas that I had. Now the first is ticker CC for Chemours. You know, I don't even know how to say it, to be honest with you. This is the spin-off from DuPont. So Chemours. I'm sure there's a fancy way of saying it, but I just call it Chemours. Maybe it's French, who knows. So anyway, but here's the thing, man. This company, since the spinoff, has done incredibly well, finding support at the 50-day moving average on several occasions and pushing higher. Since the last earnings report, you have more strength. We had a consolidation here from the sort of 32 to 35 and change, 36, let's call it, this week. Strong volume as it broke out to the upside. So that's a good sign here for shares of the double C, Chemours. I still don't know how to pronounce it, guys. If anybody can let me know, how do you pronounce Chemours, let me know. Okay, so now the next one we're looking at is Cohu. And again, these are all Zacks Rank #1 strong buy stocks that are breaking out to the upside. And the Zacks Rank essentially means that there has been earning estimate revisions from analysts that keep on ticking higher. So as these EPS estimates tick higher, as long as the valuation stays intact, you'll see these stocks push higher. And here with Cohu, big jump on earnings, and it just has not looked back at all. The recent strength here started after a brief little pullback. I wonder what this pullback was even about, right? Let's do this. Let's do a quick little fib retracement here from the lows to the highs, and you'll see that came right to the 23.6% retracement. Commodity channel index got oversold, crosses the zero line. That's a perfect setup. So what's the target on this? Remember, guys, I like to play these fib retracements, but then you also add what I call a fib extension. So if we're not going this direction, we're going in that direction. So in this case, on this particular piece of software, I have to use the negative amount, right? So if it came down to the negative 23.6 to the upside, typically you see at least the 61.8. Really, in most cases, the 76.4. Okay, but let's look at the negative 61.8 on this. So that's basically the extension. So that means 21.01 is the short-term target or intermediate-term target here on shares of Cohu. That's ticker COHU, and that is, again, a Zacks Rank #1 strong buy. Now, just to keep the pronunciation difficulties going today, this is Grifols, ticker GRFS. I think I'm having way too much fun with these stock tickers today. And this is a stock that bounced around throughout the course of last year and then really got its groove heading into this year. Found a lot of support here at this 50-day moving average. Sort of a double bottom. Well, really this bottom was being put in a little bit earlier, but sort of a double bottom. This big down day was really the trigger, and then since then it's been rallying higher. This looks great. Looks like it could continue to keep on going, and really you can use this 50-day moving average as support. You could wait for a pullback to that. We do have a gap here, but that was actually an area that had already previously been traded, so I would expect these 1850s to provide some decent support should the stock come down. Again, that's Zacks Rank #1 strong buy, Grifols. Then one that I have in Home Run Investor, this is Momo, ticker, well, Momo. This is a Chinese internet mobile gaming company. Talk about a roll of the dice. But since mid-December, just get out of this thing's way. It's doubled since mid-December. And look at the increased volume here. So people are starting to pay attention. It's getting some institutional looks, which is great. We have another scenario where the commodity channel index came down, almost nipped that the zero line, and the stock started to rally higher. Getting a little choppy here. You see this horizontal histogram I have here? These are volume at price bars. So there is a lot of activity going on here. I expect, you know, if this thing comes back down to these 32 and change, 33s, that'd be a great buying opportunity, I think. Don't worry so much about this trend line. I think that this volume here will survive, will provide some support for it. That again is Zacks Rank #1 strong by Momo, ticker MOMO. And the last one I got for you is Parker-Hannifin Corp, ticker PH. This is a pattern I love to see, especially for momentum trader. It's just the slow and steady, right? So it just kind of starts in the bottom left and creeps on to the top right. Really, I mean, so we had a huge rally here in mid-November, right? But for the most part, this isn't a stock that's had huge spikes up and then, you know, rip your face off retraces that really hurt to the downside. For the most part, it's been sort of a slow and steady kind of pace, which is great. You see here, strength at the 50-day, strength at the 50-day, strength at the 50-day. This last strength at the 50-day was a great buying opportunity as the commodity channel index got oversold, crossed through the zero line. Now we're breaking higher. I think you can chase this thing a little bit, and you can put your stop just below this 50-day moving average. That's a nice little risk versus reward for you on shares of Parker-Hannifin. Okay, guys, so thanks so much for hanging out with me here today. Remember, Bartosiastics. Get me on Twitter at Bartosiastics. Make sure you follow the author here so you can get hooked up with all of Dave's daily dives. And I will see you all on Monday. Have a good one.